I'm Jim Check. You're watching Now Media. With me, Blake McLaughlin, VP Explorations for Axcam Ventures. We're going to talk mining here. Maybe tell us a little bit about yourself first, Blake.
Thanks for having me, Jim. Yeah, I'm a geologist by trade. Spent a decade and a half jumping out of helicopters and float planes, and over the last 5 years, we built a big mine in Ontario. So I've kind of seen the full cycle of mining in Canada, from breaking sparkly rocks to putting big things into production. And most recently, we built AxeCap to take advantage of the position where a lot of juniors are in, where there's lack of funding opportunities and looking to divest of non-core assets to provide non-dilutive financings for their companies. And so we put a portfolio together about 8 million ounces over the last year, and looking to take advantage of it into the gold bull market that we're in right now.
Yeah, I was a mine site controller in my past life as well, in a nickel mine in northern Manitoba there. Not the big Inco mine, but south of that, a small nickel mine that we were taking into production. And also been an investor in the junior ever, way back to when the Vancouver Stock Exchange was still a thing. You might be too young for that, but when the Murray Peasants and that would have the next great thing. But Canada has a history of some of the biggest deposits ever. The Voisey Bay. Do you remember the Voisey Bay discovery? That was a huge thing. The Voisey Bay out there.
Certainly do.
And then there was, the Diamet here, a Kelowna company that, hit big up there in the territories there with that diamond mine. Like recent ones, Great Bear, which was sold out to Kinross and stuff like that. But it's really dried up. And I know I have quite a few friends that are in the junior exploration. The capital is kind of dried up for a lot of those junior exploration companies here in Canada.
Yeah, it's been a rough run for the last 10 years. We kind of say, exploration spend has been relatively flat, and that's largely because of availability of capital, right? And I think, lately, over the last 6 months, we've seen some of that capital return. We've seen some of the majors are well funded these days, and the near-term producers in the development space have been doing big, substantial raises. So always optimistic about that. Those are generally the first people to get funded in this type of cycle. And so now we're starting to see these smaller but reasonable size financings happening in the junior space again, which is a great spot to start. And we see it boots on the ground, where the assay labs are backed up and 2 to 3 weeks behind schedule, and so that's always a good sign for the mining industry. When that happens, it means drill bits are in the ground, we're pulling core or chip samples out, and really that's how we create value.
So, but the juniors are really the pipeline for some of the, like the midterms and the large caps, because they buy them out usually, typically, like if we take Great Bear as an example, Great Bear was bought out by Kinross, and that's typically the cycle for a lot of these junior exploration companies. They define a deposit, a major comes in, takes them out, and then, because they're not really, in the process of mining. So how do we fill that pipeline in Canada here? Because now mining is supposedly one of the focuses because of AI and all these things. We need these critical minerals and that, but I know when I was involved too, it takes 20 years almost to get a mine in production here now. So how do we ramp that up? And how do, is that deregulation, or how does that, like I said, when I was a controller there, the amount of regulation that we had to go through was crazy.
I think part of it is patience of capital. We need capital to come back into the sector that has patience that mining requires. And so over the last 10 years, we've kind of gone from somewhere in the 8 billion of resource-specific managed funds to somewhere in the range of 1.5 billion today. So we need to see sector interest come back with that money that is actually focused on growing and building the sector. And then also, I think some of the stuff that we're seeing happening now is going to be beneficial to us. So in the U.S., we're seeing a little bit more kind of private-public partnership, right? Government interest in some of the assets that are fundamental to their critical mineral strategy. And these more long-term approaches are certainly going to help us, because they're going to allow for that time frame that's required to get these projects built. But then also on the supply side, I think we're going to see those marginal effects, where we're going to see co-products start to be produced more readily out of active mines that were never necessarily valued appropriately. And also with this, fairly substantial margin expansion that we're seeing in the majors happening over the last year, that marginal ore is going to become more important. So we should be able to see a moderate increase in production through assets that are already moving. But really, some of this, some of this newer kind of tech involvement or government involvement in underpinning commodity prices and or providing some foundational financing opportunities for them. I see that as a positive step.
We do see some capital flow. I'm going to pull up a chart here that I think you reposted this on LinkedIn, showing where some of this mining is being, where the money's going actually into the U.S. too, right? So again, like some of the greatest mines, like Voisey Bay and that out in Newfoundland, and again Diamet and that. But like if you look at that chart there, Wyoming, Nevada, Utah, Arizona. Um, so how do we get more of that money into Canada for something? Because we have some of the greatest, like resources in Canada, and we have some of the greatest miners as well. Like some of the companies here, and I've interviewed a few of them in the past, B2 Gold and Silvercrest, but a lot of the mines are in other countries.
No, and I think that chart really hits it, right, where jurisdiction matters. And I think that was a reference to Fraser Index for 2024 top mining jurisdictions, right? And so it really shows that across Canada, we have these really, really high quality mining jurisdictions globally. And it continues to kind of reiterate what we've always been saying is that Canada is a commodity superpower. And we have a really strong, good framework in terms of how we can build these projects that can provide good value, right? The flow through system that we've had in Canada has been really beneficial for juniors, and types of systems like this that benefit capital inflows into our market. Um, have been effective at developing these projects. And you see, yeah, like as you mentioned, Newfoundland, right? And you had Calibre building, right out there. That was a big acquisition target, right? Recently bought by Equinox, and so we're seeing consolidation in the space in Canada, and some of the biggest performers in the market these days, right? When you look at like an Agnico, who is largely a Canadian footprint, and has really shown that developing the strategic package in Canada and continuing to advance all of their assets have really put them as leader in the space.
Yeah, I am Gold that put their Cote mine into production recently as well out there in Ontario.
Yeah, I was building a mine for Argonaut Gold in Magino just down the road there while they were building that, and we saw the struggles as capex expanded as it has on a lot of these large open pit projects, and the financial struggles that it put them on. But they're building a multi-decade mine, de-risking it for the future by putting a bunch of tech and automation in it that will somewhat cushion it to some of the inflationary pressures. And it's great to see, right? Over the last 5 years, we put 3 large open pits in production in Ontario, and we're seeing this evolve where these projects were underground mines in the past historically that couldn't operate at gold prices, and with the change in the environment that we've opened up a kind of a new set of deposits that we're able to effectively mine these days.
Yeah, commodity prices couldn't be better, right? Gold is kind of hanging on to that $3,400 mark, and that's in US dollars. Copper's at a nice price as well. Nickel's nice. Like silver is at a great price as well. So I mean, the commodity prices are good. And a lot of times, if you have a gold mine, you always get the byproducts of copper and silver and some of the other things that come out of it, nickel even. Um, you guys have, where's your projects? Where is AxeCap's Ventures projects right now?
So we really took the jurisdictional safety approach when we started to build our portfolio. So we have assets in Nevada, Wyoming, and British Columbia. Nevada assets the 5th largest gold deposit in the lower 48, and our other 2 assets are near million ounce deposits in Wyoming and British Columbia. All jurisdictions that we see strong regulatory frameworks and the ability to advance these projects. They're drill ready and certainly advanceable, but in areas that have significant deposits of scale. We see deposits of scale really being a key to the future, particularly when you have this kind of cyclicity in commodities, right? If you have a 7-year mine, it's hard to operate in a down cycle, and so that's been our main package, and across the portfolio, we have about 8 million ounces in those three assets that we continue to advance.
And Nevada's always been a hot spot for gold for sure. But what's the property look like in British Columbia, and where is that located?
So we're about an hour and a half drive west to Williams Lake, central BC. great area. It's a relatively arid portion of BC. You can drive a pickup truck right to the drill sites. So it's not the helicopter supported 15 feet of snow Golden Triangle portion of BC that many people are familiar with. But the advantage is that low cost exploration, easy access, something that you really could facilitate building as you advance that resource with a much more reasonable kind of outlay than something that is much more remote.
Yeah, and how is, like, if we compare Nevada versus British Columbia, what is the comparison there as far as, like regulations and support and getting, like exploration dollars and that, because, flow through monies and that?
Yeah, so flow through is an obvious difference for the exploration side. There's a great market for flow through investors, to have those tax benefits, and so we really like that about BC. I think it's a super favorable thing, especially where the project sits, where it's drill ready, needs to be advanced, and has a clear path to growth. Um, Permitting wise, BC's got a fairly straightforward framework. Indigenous consultation is different than it is in Nevada. More important, I would say, in British Columbia than arguably anywhere, but it's very important everywhere we go. Um, but really, it just comes down to stakeholders involved, right? And there's different stakeholders on every project, and they all want to be heard and want to be involved, and that's a reasonable ask, right? And so, as long as we're making sure that all of our stakeholders are being involved, then we feel like we're really doing justice to the assets. We're seeing the permitting change a little bit in Nevada with, the current administration, Fast 41 type kind of plans in place where you have products that fit into their critical mineral strategy, then you can certainly look to advance the permitting pathway and accelerate it. I think that's fantastic. We don't necessarily have to bypass environmental regulations or health and safety standards to do these types of things. We just need to prioritize them, and it makes sense, right? When we can do that and advance these assets in a way that aligns with the public good. Building more commodities at home should benefit everyone.
And what are some of the projects in British Columbia, other than your own projects, that you think are close to, either a discovery or close to production? I know there's some mines in production here, and obviously the Highland Copper one that's nearby us here is got some extension in their mine life, which was good. And I think, like, even though the Trump tariffs hurting it, I think most of that copper goes to Asia and actually might be helping it with the copper prices that have gone up.
Hey, yeah, that's one of the benefits of British Columbia. You kind of get this polymetallic nature of deposits, right? And so you kind of get that whole suite of the commodities that are certainly in flavor today, and have been for throughout history. But yeah, nearby to us, I think the biggest story is probably Artemis Gold that brought Blackwater online. They took their deal from something like a $5 stock to a $25 stock by executing, right?
Mhm.
Not some big dream. They took a project that had good fundamentals and they built it, and they did a good job building it, and put it into production. And so this is what we love to see in the industry: are people executing on their plans effectively, right? It's the overpromise and underdeliver that continues to hurt. And so when you see this go kind of as planned, it's great, right? And then we see this now where even projects that historically have maybe been undervalued or underappreciated, something like Spanish Mountain Gold, which is nearby our BC asset as well, and it's relatively low grade but fairly big, and they just put out a new PA with modern economics that looks fairly appealing. And so this is one of the big benefits that we're seeing is these projects that have historically either been marginal or maybe had a skewed view, potentially because of their location now are getting an uplift because those minor impediments have much less of an impact based on the margin that we're seeing today.
Yeah, the one junior that I'm following right now, American Eagle Gold, that's like they've done a lot of exploration as well. So there is some juniors out there. But again, I remember back in the day, the Voisey Bay, when the takeouts were huge, right? But I haven't seen a big takeout for a while, other than Great Bear when it was taken out by Kinross. I don't know if you have any, the ones that you can remember. Dimet was a big one too that had extreme valuations when it went public. Diamond sector obviously in big trouble here in Canada with like all these fake diamonds or I guess synthetic diamonds has really cratered the diamond market, right? So
Yeah, that's a whole different one. That's been a tough one for sure. The the marketing campaign of De Beers has come to an end as it seems, right? But yeah, no, on the M&A side, we're still seeing some decent activity. We saw Goldfields buy a Cisco or O3 earlier this year for about 2.2 billion for the Windfall deposit in Quebec. But globally, there's been a handful of pretty decent M&A transactions. Augusta Gold just got acquired in Nevada. And, we're seeing consolidation. My kind of feeling and model on the whole thing is we're going to see consolidation in cash flowing assets, near term cash flowing assets, slightly further away term from cash flow, and then we're going to see that come into the junior space, right? As the availability of those things diminishes, then we'll start to see that come downstream a little bit more. And so I always kind of said, we need something like 6 quarters of strong gold performance to really see money come down into the developer space. And that's really why those developers have suffered over the last 10 years, because we've had two kind of semi bull runs in gold, but both of them have been about a year or less. So we've never really seen that money flow downhill. Where now we're kind of into that 6th quarter, we're starting to see the developers get funded, advance their projects. We believe we'll start to see some more aggressive M&A in that space, and then the next step to bat are the juniors, right? And this is really kind of how we see the playbook folding out.
Yeah, there's been a lot of frustration in the market. I have a lot of friends, like I say, that are in mining, and when gold went over $1,000 an ounce, $1,500 an ounce, and you expected to see some really good cash flow from some of the mid tiers and the seniors, but it didn't happen. There was all these write downs and all these things, and now gold over $3,000 an ounce. Obviously, there's got to be some good margin there, and they should start reporting some really good earnings, which is that's expected. And you hope that as they do really well, then people start looking down the chain into the mid tiers and then down into the exploration stocks, and hopefully there's some kind of a revival there. But like I said, IM Gold suffered forever in the doldrums there. I think it went down into the dollar range there, but now it's up over $10. Kinross the same thing, which you thought would have got really hurt badly with their rush because they had a lot of Russian assets and stuff like that. But they also have some really good assets outside of Russia too that really strengthened them.
Yeah, and I think COVID hurt everyone's margins substantially, right? We saw real strong inflationary pressures through that period, and really killed everyone's margins. So we had to bring gold back up to $2,400 an ounce just to kind of get back to where we were getting some kind of reasonable margin, right? And then we've now kind of feels like we felt that margin expansion. So Agnico early this week put out Q2 like 1.3 billion free cash flow, right? Like we're these guys that have done it right, that have taken the right view on gold are printing record cash flow, and we really feel that we're seeing that in share buybacks right now. We're seeing that in dividends right now, but that only goes so far. If you're going to look at $4 to $6 billion in cash flow annually, there's certainly lots of opportunity to continue building the portfolio with those types of cash inputs.
Yeah, I also know a lot of people that just kind of got, I guess, tired of the gold market and the resource stocks and just kind of left because there's so much easier capital flow when you're talking about mag 7 stocks and stuff like that. When you're talking about the tech stocks, because you can get in and out sometimes if you loaded up with a position in a resource stock and you had a substantial position, it just was hard to get out. You know what I mean? Like the volumes weren't there. I take a look at Ocean Gold. Oceana Gold, and I owned that one, and that thing was in the doldrums forever and ever and ever and ever and ever, right? So I finally got shaken out of that one. I was just like, okay, thing is going nowhere. And here it is. We look at it in the last year and a half here, and the thing has skyrocketed. Right now, it's a triple, right? But like for 10 years prior to that, it was just dead money.
Yeah, well, if you look at New Zealand, it's been one of the most active movers from least favorable to most favorable mining jurisdictions globally, and I know that they have a fairly substantial presence there. So likely a contributor there, but certainly, yeah, it's part of it, right? That it's been the struggle, and between, like you said, between crypto and the FANG stocks, and it was cannabis before that these other speculative asset classes that have existed have really pulled a lot of that speculative capital away from early stage mining and resource development.
So,
Um,
so what do you see for the future in mining and in British Columbia, particularly, or in Canada, for the future of mining here and what we're going to see for capital inflows. And you guys, are you guys public as well?
We are public. We trade as AXCP on the CSE and JRLF on the OTC. But in terms of the big picture for Canada, I see a bright future. We're a resource-based economy. We have everything in the ground here that you could ask for, and it's the first time in my career that we've had federal government both in Canada and in the U.S. saying we need to build mines domestically, right? We need to build these here. We need to re-onshore this type of development. And it makes me really optimistic, right? I look at the kind of how we went to fair trade in coffee and cocoa, and you can see that kind of evolution in the commodity cycle where source of supply is becoming important, right? And people are criticized when they source materials from unethical or unenvironmentally friendly regions, and so knowing sources of supply and pricing based on that is something that we see necessarily coming, and will really benefit countries like Canada, where we have really rigid structural framework, and we rely on strong social and environmental regulations to build these mines effectively.
Yeah, Canada has some of the best miners in the world, some of the best technology. Like I said, some of the best people. And usually, you follow these people around, and they build great mines. And hopefully, like you say, the regulations and the frameworks there are there to support more active mining here in Canada, because our wealth is obviously beneath our feet here in Canada. That's our biggest strength, right? What's beneath our feet there, and Canada is, I always like to say, the richest resource nation in the world by diversity, for sure. There's some countries like Saudi Arabia that are, they definitely have oil and then maybe silica, I guess, but other than that, they don't have the amount of, or the breadth of what we have, right? Everything from LNG to oil and gas to copper, nickel, silver. And if we look in your Saskatchewan, potash, uranium, and uranium stocks are just, like, I think one of the most important things going on right now. And then Cameco, one of the biggest companies there, and then like a mid-tier or junior that's about to break out is Denison and stuff like that. So I advise people to like try to learn more about mining, because that is really what's going to support this Canadian economy. And then people that don't like mining should walk into a hospital and see, with all that equipment that's donated, and you're going to see names like Kinross and like all those big names are going to be on names of some of that equipment in hospitals, and that's what builds communities in Canada. You don't have a town like Thompson doesn't exist because it's a great place to build a town, right? That exists because of Inco's mine there, the nickel mine, right?
No, it's so true, right? And it always comes back for me is like, if it can't be grown, it has to be mined, right?
Uh,
And we're fortunate that we have all this stuff that we're standing on, and the opportunities here to build value for the country through these commodities, right? And I'm optimistic that we're going to be able to do that in a way that everyone in Canada can benefit from it.
yeah, we have some of the richest history. I mean, the Canadian stock market, the TSX, started from a mine, right? It was the Red Mountain mine there in Trail, right? So,
Yeah, and I spent a lot of time in the cobalt area where they were doing like really early days silver mining in Canada and some of this stuff, and it's quite amazing to see, that exactly that, like that, that legacy, that even like pre-Canada legacy of mining that's been happening here, as such an important piece of our country, right, of our fabric.
yeah, and if anybody gets a chance to go underground, it's quite the experience. I've been underground many, many times, and you got to do it once at least, right, to experience it and then see what the people are doing. And the jobs in mining for people too. These are the jobs that you build families, buy houses, and pick up trucks and all that kind of stuff, right? I mean, they're good, solid paying jobs. And the site I was on, we were building a mine, and I think we had like 250 people on site, right? So, and we tried to employ as many people as possible from the community, the indigenous community that's around it, and training people, because you got lots of training to go underground too.
No, that's exactly it though. But it can really build value in small communities and build small communities, right? And I encourage everyone, all the next generation looking for opportunities. Is like, mining's a great opportunity. You can make a
Yeah.
good living and do some really fun, exciting stuff. See different parts of the world that no one get to see. And contribute to something that lasts for decades. Like I'll find it really rewarding to go back in 15 years to the open pit we built last year or 2 years ago, and see where it's progressed, right? And you can have an impact that lasts decades. And you feel that.
Yeah, so you started out as a geologist, obviously walking around in swamps, I guess, or traipsing around in mountainsides and trudging through snow, I guess, or what have you, depending on where the property was.
You got it exactly. Yeah, doing geophysics and geology, pulling wire around in the forest and running around. Yeah, in the real remote areas, you get dropped off by helicopters. In the less remote areas, you drive ATVs or snowmobiles around, and you're exactly looking for rocks, looking for that next discovery, managing diamond drills, right? Taking the core samples out of the ground, making sure that everyone knows what's going on, and you're building this kind of foundational data that's required to really advance these projects. And so through that whole cycle, you really get to appreciate what it takes to create that data and the value behind it.
Well, thanks, Blake. That's been enlightening, and maybe we should catch up more often on the state of mining here in Canada, because I know it's such an important thing to our economy right now, and how to get more mines in progress and how to get more capital there, because that's one of the biggest things that the mining industry needs is capital, so that you can turn those drills, right, and turn those drills into mines.
You got that right, 100%. We need continued capital in mining to build this, but at the same time, the entire mining industry is about half of the valuation of a company like Nvidia, and so
That's crazy, isn't it?
a small movement in retail portfolio makes a significant impact in the mining industry, and we will see that as people turn to physical assets.
And many, many millionaires have been made in the mining industry here in Canada from investors back in the day, like I said, like the Voisey Bay ones and stuff like that, Diamet, and lots of big success stories. We need more of those, though, and obviously we need a higher profile, because I know a lot of the majors were kind of like not really seeking any profile because of all the negativity towards mining at times too, right? So I think it's time for mining companies to actually tell their story.
I agree 100%.
All right, thank you for your time today, and hopefully we'll chat again, I'm sure, and we do thank you for watching Now Media.
Thanks a lot, Jim.
Just report the news. We live here too. We're your neighbors, bringing you stories that matter to all of us. No government funding, no outside